Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. Well, having reached the target of 66 figure 15 last week and posting a fresh intraday high of 66.30, its strongest level since early November 2024, the Australian dollar once again came under pressure for the second straight session on Friday, ending its four-day rally against the US dollar, which settled at 97.40. The RBA surprised markets earlier this month by holding rates at 3.85% on a split vote, with the incoming governor, Michelle Bullock, stating that the debate centred on timing, not direction. Looking ahead, a soft Q2 CPI on Wednesday could boost rate cuts bets. Also this week, market faces a heavy risk calendar, including the Fed's policy decision, where it's widely expected they may keep rates on hold at 4.25% to 4.5%. Along with that, market will be also watching to trade developments ahead of Trump's August 1st tariff deadline. And also there has been some geopolitical tension, which has flared after Thailand reportedly launched airstrikes on Cambodia targets, accusing Cambodia of firing rockets and artillery. Nevertheless, as we turn to the technicals, broader aspect has buckled away, and you can see once again this trend line that emanates back to May has capped the rally and now puts pressure on the midway point. Technically though, I still feel from a broader aspect the Aussie did close on a bullish note on a weekly bias, and therefore could see further gains eventually to the upside and clear the level of 66.5 and on towards 67 cents. As weakness comes back into play, 65.45 is seen as minor, and still keep an eye at this 65.85 60-day simple moving average, as it has served potentially as a good bull trend as the market continues to reject off this region. The euro dollar also came under renewed pressure for the second straight session on Friday, retreating once again from the key area of 118. And from the retreat, the market is now looking back towards the support area seen at 116.90 to 117. Despite the pullback, the pair still closed out the week up nearly 1%. Last Thursday, the European Central Bank, or the ECB, held rates at steady at 2.15%, as widely expected, pausing its easing cycle and adopting a more neutral stance on the Eurozone outlook. The dollar is still comfortably holding above 97 at 97.40. As I mentioned earlier, looking ahead, market faces a pivotal week filled with high impact events. Besides the Federal Open Market Committee, or the FOMC, decision on the 29th-30, which is expected to keep rates on hold, we also get the US data releasing also its Q2 GDP advanced estimate, core PCE inflation, and also another key number, the non-farm payrolls. In addition, markets will be keeping a close watch, as I mentioned, President Trump's August 1 tariff deadline. So turning to the technicals, as I mentioned before, looking at the euro, the weekly bias still holds above this trend and therefore could see further gains eventually from this region, which is somewhere around 116.30 to 45, and look back towards that key area of 118, which I eventually expect to see break and see a rally on to 119 to 120 on a broader call. The US dollar extended gains against the Japanese yen for the second day on Friday, but failed to break above the 148 mark. Looking at the technicals, the RSI is back in positive territory, and as we can see again, any moves towards this top side of 148 to 149 still struggles to hold. After recently posting an engulfing candle, the market plummeted, but no initial bullish move when it comes to the candles here. So once again, I expect it to fail and eventually see the down test back towards the lower side of the region of 145. Sterling was a bit heavier on Friday. Nevertheless, getting closer towards this bottom side of the range where we can put this line in here, which comes in somewhere around 133.70. A bounce from there could see further gains and eventually close back above this trend line and see a move on towards 137. Wrapping up with commodities was also somewhat heavier as we now look below 3,350 and now towards the region of 3,315 to 25. Like previously, I do anticipate a return of demand to the bottom side of this range and see a recovery back to the recent call of 3,400 and also the all-time high stabbed in April around 3,500. And wrapping up with oil, the market was once again weaker, but still contained in this broader range of 63 to 68. We can see this market keeps yo-yoing inside this range, so as we get closer to the bottom of the side around 63 to 64, should find demand and see a recovery back to the top side of the range at 68. Well, that's a wrap. Thank you for joining me, and as always, look out the intraday report. I hope you enjoy the great start to the new week.